Hey everyone, this is Kirk here again at Option Alpha. This is the members only video update for the 31st. Happy Halloween, obviously, and hopefully you guys are already out with your kids trick or treating by the time you watch this video. So, if you find it in your inbox tomorrow, this is a video from last night after the close. But what I want to do on this video, and it's great to get back here on some videos with you guys, is go over just a couple things as we start to get really into the meat of the election. Elections next week, right? I've said numerous times, both in emails to people and on some other videos as well, that I really don't think that the markets really care who wins. I think that they just want somebody to win. Now, we all may have different opinions ourselves, but again, I think the markets are looking for a decisive either who wins, who loses, whatever the case is. Markets hate uncertainty, and right now it's extremely uncertain. So I think that overall, whoever wins, loses, whatever, the market will rally for the rest of the year, probably through Christmas. I think that we'll see a pretty good rally here through Christmas, barring something in Europe that really takes us off the rails here. And I've got some charts and stuff I want to go over with you regarding presidential cycles because I've had a lot of people email me about this and did a little bit of research and using some other people's information. I think it's important to go over. I think before we get into the presidential stuff, I think what most people don't understand is that regardless of who wins the election, what's really important this year is who wins and controls Congress, right? So Republicans right now are in control of the House, Democrats are in control of the Senate, but I think if the Republicans hold the House and Democrats hold the Senate, then largely whoever wins the election is going to be in pretty much of a fairly amount of deadlock, right? They're not going to be able to get anything through Congress anyway. So it's going to really depend on how that shift of power goes in Congress with regard to the Senate. Now, if you actually take a look at it here, let's just say that Obama wins and the Republicans control Congress. So they win the Senate seats that they need to control the Senate. They've already controlled the House. Let's say Obama is still a president. We're looking at, on average, historically, between all the elections and from 61 on, that we're looking at a pretty good market, right? Probably not going to get a lot of stuff through, but that also leaves the opportunity for not a lot of indecisive legislature that comes through. Now, let's say Obama wins and the Republicans fail to control the Senate, or fail to regain control of the Senate. Obviously, we're still looking at probably above average returns, but again, you'll start to see where the stalemate comes in, where Republicans are going to want to try to push through a lot of things, and they're going to get blocked by the Democrats. So again, whatever your party affiliation is, it's important to know what these figures are historically. The guys over at Calculated Risk did a nice chart of the historical returns about 30 to 45 days after the election. And it's pretty interesting to see where the major trends are. And you can see that barring the 2008 and 2000 returns, which are obviously during bubbles and depressions and 9/11, etc., that you actually had some pretty good returns overall in the next 35 to 40 days from the election. So I'm thinking that as soon as the election happens, that the markets will start to at least show some resemblance of balance and liquidity. People will start to come back into the market, be a little bit more sure of themselves, a little bit more confident, and we'll start to see stocks, at least rally a little bit from here on through Christmas, right? I think once we get there, then it's a lot of the Euro stuff, fiscal cliff, which is obviously going to be a big thing that we'll continue to talk about. As far as the stats go, I wanted to dig into a couple of these stats real quick, and stay with me here on this video. I know it's getting a little bit drag out, but I'm going to go through these fairly quickly. When you take a look at the S&P option stats, and I think this is such a cool tool that Thinkorswim has added, is these today's option stats. As we get towards the end of the week, jobs numbers, a lot of employment information, it's important to know where the trades are being placed. So you can see that most of the volume on the SPX was actually on the puts, right? They had a considerable amount more volume than the actual call volume. Now, that doesn't necessarily mean that it's buying, selling, right? We don't know what it is. There's just more volume in puts. Could be people getting off, hedging in, whatever the case is. When you actually dig down at the deltas, where the trades were made, it's interesting, I think, in my opinion, that most of the trades were made today with a delta between 0 and 20. Now, with regard to the calls versus the puts, which is right here, what this means is that there were more trades being made on put options that were further out of the money. So I'm thinking to myself, I think that this really shows that a lot of traders were buying this out of the money protection, right? Going long a lot of puts, and they were very far out of the money. Now, whether they think anything's going to happen sooner or it's just purely a hedge, who knows? But a lot of economic data is coming through. We're getting up close to the weekend and the election. We've had a short week of trading, so a lot of people are trying to push money around very quickly, whereas they would have done this Monday, Tuesday. Now they're starting to do it Wednesday. So again, this is just stuff I want to point out to you guys, and you guys can obviously start taking a look at this as well. We get into the actual charts of the S&P. We've clearly broken this trend line and this channel that we've been in for the better part of the last 4 or 5 months here. I think what's important here is that we haven't really rallied back up to underneath of this trend line. The closest thing that we'll come to is at least rallying back up to around 1430, 1440, trying to touch and retrace underneath this trend line. If we do happen to break inside of it, then we have to hold that break inside before we can continue higher, right? It's important that it actually holds. It doesn't just break inside this channel. Now everything's hunky-dory. It's got to hold. It can't break inside and then come right back outside that channel. So if this channel is going to hold up, which it's a pretty strong channel that we've been trading in, very good slope. It's not too steep, not too flat. A very good channel trade. It's got to break and hold inside. I think the more likely scenarios that we'll actually see over the next couple of days are rally up to the underside of this trend line and then start to fall away again, as that's a successful retracement of that move. So again, that's where I think things will be going over the next couple of days. If you actually take a look at some of the things like CCI, MACD, kind of echoes some of the sentiment that we're starting to see, right? We've had a pretty good sell-off in CCI, pretty overextended there, but now a little bit of momentum is coming back into the market. So I think we could see, again, a little bit of a rally here over the next couple of days and definitely after the election. Same thing with MACD, although it's not at absolute oversold levels, you can see just zooming out, right? It's not at these oversold levels at 20 and 30. It definitely is down below the zero barrier, right? So this is a better area to start thinking about going long. We haven't exactly crossed above the dotted red, which would be our actual buy signal. So this black line crossing above the dotted red. But again, you can see on the histogram that we're starting to make progress, right? Momentum is definitely starting to shift in favor of the bulls. So hopefully this has all been really helpful for you guys. As always, please email me with your questions or comments. I think we'll take it a day at a time, as always. We do have a current working order that I'll probably just end up changing out here. The 1550 and 1555 SPX call spread. The reason I'm trying to leave it on is because I think if we start to rally here, that those premiums are going to start to go up. So I'd hate to move that strike closer and then just be knocked out of the trade because I moved it closer and the market rallied right against it. So I think right now we're just going to hold this tight for right now. And again, we'll continue to adjust. But the next area I'm looking at is this area between 1235 and 1250 on the S&P. So be on the lookout for that type of trading alert. I think that might be one of the better trades out there. Also on the Russell. The Russell is definitely in a nice little channel right now as far as support and resistance. So anything below 770, 725 in that type of range, I think is a fairly good trade should we start to get some of these buy signals on the indicator. So as always, hope you guys enjoyed this video and happy trading.